Welcome to you both. Andrew, I guess the question is, look, this stock's now down 90% from its highs. I know the market doesn't care where a stock has been, but at this point, the guidance seemed to suggest things are going to worsen throughout the quarter. Is this a broken business model, or is there something else going on that Snap is telling us about?
Now, at the end of the day, I think Snap has exceptional reach among younger users. And so as linear TV continues to decay, I think it has a very strategic position and a place within advertisers' budgets as they have to build brands with younger users. Remember, they reach 90% of 13 to 24-year-olds across 20-plus countries. They are a strategic line item in a bunch of brands' budgets at this point, and I think that place continues.
Okay, so that's the argument for, this has a place in the industry. The product has uptake. Why is the company been unsuccessful in being able to monetize in this environment to the degree that it expected to?
Yeah, I mean, looking back more near term, I think TikTok has been a big influence on just brands' ability to allocate budgets. If you are a retailer at this point, there's no TikTok made me buy it equivalent on Snapchat. And so I think that Snap has been the victim of budgets moving over to TikTok. What makes us a little bit more positive is if you look at third-party data, it looks like TikTok engagement is starting to slow as of this summer. The numbers that we've seen suggest that TikTok was growing about 50% kind of in December. If you look at last month, that's now slowed to kind of high single digits. And so hopefully that cannibalization will start to slow as we look towards 23.
Barton, is this the kind of environment? I mean, are there things going on a macro basis that you also think are at play with Snap, or how are you thinking about the position that the company finds itself in right here?
Look, I would agree that they're strong in terms of their audience position with a younger cohort, but I think that this equity is telling you, kind of screaming at you, that it is outsized volatility in a world that's moving towards a recession. And I think what is surprising is that the stock is reacting this strongly to what everyone could have foresaw, which was a soft outlook for the fourth quarter based on macro. Not TikTok, but macro was really what the story was here. And I think that in this type of environment where things are only going to be more difficult as the Fed steps on the brakes, this is probably not the first place you want to sit for comfort over the next several weeks. So I would go up the value chain in internet media. I think there is this secular movement of money from television towards internet. But I think you can get better, kind of safer sleep at night exposure through something like Alphabet, which also doesn't suffer from the kind of privacy hindrances that have been, such a problem for Snap and for Meta. Plus you have some other kind of call options. So I'd go in another direction, bigger, higher quality.